It's Market Day Report. We've got a field of canola behind us, so let's start with the canola market, and we are moving higher here. November contract trading at 746.10, and it's up 2 right now. And again, keep an eye on the canola market as it's right back around positive, just moving into positive territory year over year. It, for a while, was the leader of the row crops, but again, fell off as we saw pressure come into the oil and energy markets, right? So as we've seen that pressure come back into energy, it's kind of weighed on canola, and it's also weighed in on bean oil. So let's make that switch over to bean oil. We're lower here today as those two are trading. They usually trade in tandem, but not doing that today. We're lower across the board with bean oil. How about soy meal? Well, soy meal contracts moving higher, trying to break a 3-day losing streak. And speaking of a losing streak, beans have been lower for 2 consecutive sessions. November right now, though, up to an 1143.5, and then we roll over to the corn market, and corn futures are lower for the 3rd straight session. December trades 3 1/4 lower at 436.5. He's in studio with us. Chris Swift, Swift Trading. I ended on corn. Feed grain. With that lower corn, maybe a corn producer looking at that, not real excited, but maybe a user, a buyer, feed grain buyer, can look at that, and that's helpful.
Absolutely. You mentioned earlier about it, the grains being a component of the energy market. Energy has clearly gone down now, trading around in the $75 range for crude oil. But what that did was create an enormous crush for bean oil and for the corn as well too, for the ethanol, and it produced a lot of cheap feed. So when we look out into the future there and we saw that soybean meal where we're now starting to get just a tiny bit of inversion there on it, it's really inexpensive when you look at that $300 level. The lowest that I've seen it in the last probably 10, 12 years has been $255. So we're within $45, a very important low. And we've been kind of tapping this low for several months now. So when we look out for our poultry, pork producers, aquaculture, even our cattle feeders there to the corn market, all of that loss of the energy component has really pushed those feed grains down substantially. Doesn't mean that we're going to get that energy component back, but we do have other factors that are going to inhibit the grain market. And I've listened to others talk about the El Nino and how it may not be that much to us, but it could be huge to South America. And anytime I think of South America, I think of soybeans. So those type of issues that have taken place earlier this year, kind of literally out of the blue. Nobody was expecting a war. Nobody was expecting $110 crude oil real quick. And now it's coming back down again with the loss of the component of the energy to it. But it gives us a great advantage to be able to look deep out into the future and book some prices or fix some prices that we may not want to pay deep into the future.
Okay, let's turn over to the wheat market now, and here's where Chicago's trading. We're off 6 1/4 at 591 3/4, and that's on the July. Again, this is the new crop. All of these are new crop contracts moving lower for the 3rd straight session. Hard red, and we've talked about the challenges, weather challenges this hard red crop has had. July at 625 1/4, it's down 8 1/4. And I throw that in because it ties back into that weather story as well. European Union, they produce quite a bit of wheat, and they're experiencing record high temperatures this week. Just a gentle reminder that weather doesn't just affect us.
Oh, absolutely. And clearly in the wheat crop, we saw that 80-cent drop kind of put us back into competition again with world wheat. So if we have issues somewhere else in the world, then that might give our wheat a little bit better opportunity.
Okay. I've got one more for you, and when we're thinking of feed grains, this doesn't fit into the feed grain category. And you may be wondering, wait, it's something we wear. It's a fiber, right? December. Cotton, 78.26. It's down 115 points, down for the 3rd straight session. But how about cottonseed? Yeah, cottonseed's been trading around $300 to $400 a ton, if my numbers are right here. And again, what do we use that cottonseed for? It goes back into the dairy industry, and they'll feed it to the dairy industry. So you're talking about two sides on that cotton, the lint going into the fiber, and then the seed, which can then go back in. I was trying to tie it in like a feed grade.
I'll tell you, when we come back from the break, I'll tell you something about cottonseed.
I can't wait. It's coming up next with Chris Swift on Market Day Report. All right, let's talk livestock futures here. We'll start with live cattle or fats. The June contract expires in a week. 255.07 down 75, and that's really trading where we saw cash trade a couple of weeks ago. Last week we ran up 259, 260. August right now 246 and a quarter. It's down a buck and $1.10 at last check. Now feeders down 90 cents, 369.52. Let's get hogs in here. And hogs are trading mostly higher. August up 115, 97.87. And since we ended on cottonseed, which is a feed component for the dairy industry, look at that 15 up there on July, class 3 milk. We're seeing strength in some of the protein sector there through the whey. However, a little pressure this morning, actually pressure over the last couple of months here in class 3 milk. In studio with us, Chris Swift, Swift Trading. Okay, you teased me with cottonseed.
Do you know why they don't feed them to chicken?
I would imagine it's because chickens only have one stomach.
No, it turns the yolk black.
Does it
Yep,
really?
That's what I've heard, is that if you feed chickens cottonseed hulls, it'll turn the yolk black. So, why, I don't know, but that's what I've always heard.
Well, that's dark meat, right?
Yeah, I guess so.
Okay. You know, but it worked us right into the conversation, though, here on the livestock side. We keep asking, have we found the high? Have we found the high? And it seems like every time we say that, we just kind of go back up and start testing it again.
Well, and we are, and I made note of this, and I may be repeating myself, but I know that bottoms tend to be long and drawn out because we're trying to absorb a lot of supply. Tops usually tend to be very pointed and sharp because that high price encourages expansion, it encourages competition, it encourages a lot of things that we've not seen happen now. So in all honesty, we're building an enormous top. It might blow higher, but the congestion that we're seeing right now, still negative margins for the cattle feeder going in. Cattle feeder was profitable again last week and enormously. And the only reason is because we're having such enormous price swings out there every day, $3 to $5 to $7 in the feeder cattle, $3 to $5 in the fat cattle market. These are very unusual. And when they start to shrink back down into what we may consider somewhat normalcy, then a lot of that profit potential goes away even that much more, because from right now, you have to have that higher price. And we're just seeing a lot of congestion take place. And we saw from the Cattle on Feed report, cattle feeders don't want to sell cattle because they don't want to have to replace them with higher inventory. And the packer does not want to bid up for it because they don't want to lose any more on their margin. So it's a stalemate right now.
And again, it's where we are right now as far as that pie being cut up, where the cow-calf guy really has the biggest slice.
Oh,
right?
Absolutely. It's huge right now. They are sitting in the driver's seat right now, which is an issue, because if they don't hold back just a little bit and start keeping those heifers held back, this will just continue like that. And some may like it, but others are not liking it.
Yeah, again, you just go back to, a few years ago when the Packers had that big slice, and nobody liked that at the time. But just, I think, a gentle reminder, everybody has to eat from that pie.
Well, and these are commodity markets. They are not investments. These are perishable items, and they can be very, very price sensitive to things that are not necessarily to that particular product.
Isn't he great? Love having him in here. Chris Swift with Swift Trading, and talking about perishable. You know, that whole dairy thing is it's not like you can save milk for, a couple of years or something. It's gone.
I think some people would appreciate it if they could, but always grabbing our gallon of milk when we head to the grocery store, and as you should for National Dairy Month.